Hey, what's up? What's up, everyone? Hope everyone is having a wonderful week. Welcome to another analysis here at Financial Hub. Finally, the first half of the year is coming to an end. I think it's ending today. It's today. Tomorrow, okay, one of the days. I bet it's today, first, second, third. Yeah, today. So, starting tomorrow, starting a new month, new quarter, new half of the year. For some people, it's a new financial year. So, if you know, companies normally have the financial years beginning July and ending June next year. And so basically their fiscal years, unlike the normal years that we celebrate January to January. But anyway, that's it. I won't spend so much time there. I'll go and look at the analysis. This week, as I said earlier on, fundamental risk at risk is basically the NFP on Friday, which is coming out Friday afternoon. Apart from that, nothing much. I'll look at a few analysis and then we can continue from there. So just like we did on Monday, any questions you have, please ask in the chat room and we'll be sure to answer you. Okay, so allow me to share my screen. So starting off dollar. Let me look at the dollar. What's my analysis? This is USD card, dollar index. Okay. So remember dollar index, I talked about market being able to, within this triangular formation long term. If you check out the Monday analysis, we talked about that sideways movement after forming this series of lower lows, lower highs. Okay, lower lows, lower highs, all the way down to this level, and then now market is sort of in a sideways movement. By that I mean market did not go lower to form a new low, okay, and didn't go to form a new high over here. So these turning points are quite significant. You need to pay attention to that. Now, sort of market is still coming up to this trend line, which we haven't broken the formation of higher highs, higher lows, okay? So ultimately, remember, I talked about this last week. I was paying attention to this level. Market broke this significant resistance level, now acting as support. So I'm watching that level crucially, okay? So I was still expecting market to see if we can come down to that level. Okay, so if you can look at this, I have sort of this resistance level. So let me just zoom it out so that you can see. So if you pay attention, this level that we broke, okay, this significant level over here, it was resistance. Look at that strong break. Ever since we got that break of that part, we haven't yet corrected to that level. So what I'm looking at is if this can be a possible impulse, a correction over here and an impulse here, just to get that sort of ABC correction. Okay, so if we can get that possible ABC correction, okay, that 1, 2, 3 to that level, we can ultimately get now that push to the higher level once we come and retest that level. Okay, so I have just a risk reward that I've just placed. I don't trade this basically I don't trade the dollar index, but that's what I'm looking at. Can we get some correction unless we're able to break this level? Yesterday we had a push sort of, so yesterday we were getting some slight push up above it. You can see this candle, then we got some quick rejection. So you pay attention to that. Look at that resistance level being rejected there. That means if we continue rejecting that level, market can get a possible correction back to this level, just completing that impulse, and then we get that uptrend, okay, ultimately. Okay, so that's what I'm looking at on dollar index. So with that said, now I've sort of a similar analysis on that with Aussie dollar. Okay, so USD card, sorry. So remember USD card, I talked about two things on Monday. I said I was looking at possible long-term, this is the daily chart, okay? So daily chart, we have this trend line, this long-term trend line, which market has been rejecting once, twice, thrice up here. And then now we got this sort of breakout and a retest, okay? So if I zoom that in, just to look at this daily chart over here, breakout, retest of this level and a possible further push to the upside, okay? However, if we go to the 4-hour chart, we had sort of a trend line formation. You can see this trend line. Talked about it on Monday, talked about it last week, saying I missed that short because I didn't have this trend line. But basically you can see, look at that first touch, second touch, market got this third touch over here, okay? So also on this one, I'm expecting at least we can be having that push to the upside, but as long as we're below this trend line, expect to see this is an impulse correction to this retest level, okay? So pay attention to those critical levels where market normally pushes to. So you can see this look at this support, this resistance over here in line with the 61.8 Fibonacci level, an impulse to the downside. You got that retest for the first time, market has pulled back to that level, and we've got another retest yet again pushing the market, which I'm now watching to see if we can get that push. Market can be pushed further lower. Okay, so that's what I'm watching on this one. This can be a good short trade with a risk reward of about 1:4, 1:3, back to this counter trend line over here. Okay, so looking at this trend line over here, we can get a push back to that level, offering a good risk reward of 1:4, 1:5. Okay, quite a good correction before we get that push to the upside, or if we break this counter trend line to further to the downside. So that's what I'm watching on this one. So I have a trade running on this one, so I'm watching to see if we can get that push. If we get a break above this one, then I'll be staying out. If those stop loss are hit, market can really rally to the upside. But so far, for now, I'm sort of speculating a short position to this trend line for the rest of the week. Okay, now if I go to Aussie dollar sort of the same, but counter trend line. Okay, so ultimately Aussie dollar, I'm waiting on the daily chart. So if you remember well, I sort of have this channel like flag formation. So you can see this impulse to the upside and ABC correction. So I'm waiting for this ABC to be completed at this level, the 61.8, which is the previous resistance. Okay, we got that break to the upside, and I'm waiting to see if market can correct back to that level ultimately. So last week, basically the whole of last week, we had these 5 bullish candlesticks. The whole of last week it was just a bullish market. This week we've seen most of the bearish candles. We've not seen any bullish candles this week, but sort of I'm also expecting to see if we can get on the 4-hour chart, if we can get something of that, like what we're talking about on the Aussie dollar, on the USD card. What we're seeing on the USD card, if this can be a possible ABC correction back to this level. Okay, you see this level, which was the previous support, got broken, now turned resistance in line with this trend line. So sort of the same thing we're seeing with USD card. So I'm sort of speculating sort of the same thing happening, but in the opposite direction. So impulse correction, maybe an impulse to that level before we get those shorts. So if market can come to this level, is where I'll be really looking for shorts. Okay, if you can get that move to that level. But before that, I don't know what is really happening. This can offer a very good risk reward of 1:4, 1:5, depending on how you set your stop loss. Okay, so that can be a good trade if market can rally up to there. If not, if market continues to the downside, I'll be waiting for market to come to this level, which I'm waiting for a very long trade to the upside. With my risk reward too, there we go. So I'll be waiting for a risk reward to the upside. Let's see it on the daily chart, much better. 1-day chart. So I'll be waiting to see if market can come to that support level, which I'll be having a long-term trade on this one, quite long-term. It can be more than a month, because I already know Aussie dollar is not a fast-moving pair. It can take quite some time to get that move to the upside. So I'll be watching that to see how market will perform. Apart from that, just some other pairs I have, not crypto, currencies. USDJPY, I think there's a good pattern forming on this one. So look at this pattern. I was speculating around it. I don't trade this pair, but for the people who trade it, I was just doing some analysis. This is on the daily chart. We can see, remember I keep saying how we approach significant key levels. You need to watch what is the momentum, how we're approaching that level. This was a top before, and now when we came to form this double top, market came in the form of a wedge pattern. So forming this pattern, this can offer a very good short level for the long term back to this level. So about 350 pips from where we are on USDJPY. So this can be a good short on that one. So watch that one, pay attention on it. Okay, so that's just a pattern I was watching. You can follow it up and see. With just stops above the previous high, just slightly above there, that can offer a very good risk reward on that one. A risk reward of 1:5. So that one, people who trade GJ long term also looking like a good shot, and I've talked about this for quite some time, following this channel like formation. If you can get some correction back to this trend line, so this is also a long-term trade. Been talking about it for the past many weeks. If you remember well, market ended over here in the form of a diagonal triangle. Got to that top, you can see market has been correcting ever since. So if you can get a push back to this level, back to this previous resistance, okay, so I'm normally looking at those levels: resistance, broken, support, If you can get that short level all the way to there, that can be a very good spectacular trade on that one. So that's GJ for the long term. Watch it. GA, man, I have many now. GA, same thing, just watching to see. So these are just speculations I have. So also this one as well. simple. I'm looking at these flags a lot. Okay, so looking at this sideways movement, then we came into this flag formation, got this resistance level which market was unable to break. If we're still unable to break it, remain below long term, then this can be a good target to the downside. So pound pairs, looking for some short trades on that one. GJ. Okay, so that's just a quick analysis on that one. Last but not least, EURJPY. What I'm watching, we sort of had a channel like formation, okay, which was broken. So you can see these parallel lines in line with one another. So impulse to the upside, then sort of was expecting this market actually to go to new highs. We failed to do that. Market came back to this sort of level over here, which was failed to be broken. So I normally call this spike retest. So we normally get a quick spike, market continues, then some correction back to that level. Then you can see this momentum that came breaking the trend line. Okay, so we broke that trend line and sort of market is sort of dangling around here. So we got that breakout retest. What we can see happening over here is maybe some movement over here to form some correction before we get that downtrend on that one. Okay, and if you go to the forward chart, you can see it much more clearly. So this sorry about that. So this impulse, okay, impulse to the downside, if you zoom it out, you'll see that this is a significant support level, resistance level. Okay, so if you can get this ABC correction back to that level, back to this level, then this can offer a good short trade to the downside, a double retest of that broken trend line, which is also in the form of a flag. So you can watch on that one. If you can get that movement up back to here, and then we get that short trade, it can offer us a very good risk reward on that one. So that's all I can share on that one. I think I've done multiple on that one. I'll leave the floor to Ken before time ends, and yeah, he'll be able to share to you what he has on his side. So that's it from me, guys. Have a lovely one. Peace. See you on Friday.
So hi guys, hope you're doing well, hope you're having a wonderful time. I think on Friday I was not in the Zoom session, on Monday I was also not in, and part of the reason is we're working on several things, so Caleb forgot to tell you about that, but anyway, I'll just take in the role to do that. Anyway, we're working on a Discord group, so we are trying to move from WhatsApp and all these other platforms where communication is not really good and not really professional like. So part of the revamp that you're doing is moving into a more professionalized community where you guys will be posting things, will be having podcast channels, will be having good analysis insights coming in, will be sharing our trades, the markets you're watching, the setups you're watching, our outlook on cryptos. So it's going to be a very big thing. We're working on it. We'll be launching it very soon. We're bringing back the articles we used to do before. We are now bringing them back in a better and bigger way. So we're also revamping our website. We're trying to come up with something new, something cool, something easy to navigate. We believe the other one was a good start, but as you move more into the professional state, we're trying to professionalize some of our things. Again, we're working on a different course, so the course that we're trying to bring out will also be very good, done in a different way, very engaging for anyone who's not bought any product for learning. You'll get the best chance to learn how to trade. Obviously, with your own experience combined with our guidance, you can be able now to learn very well. But those are some of the things that we'll be working on. And we'll be sharing with you guys. So this week on the podcast, we were talking about psychology of trading. Anyone who's been trading markets understands the value of psychology. So that's what we'll be tackling on the podcast. You can wait for the episode on Friday. I've seen people requesting for a couple of setups. Someone said New Zealand USD. Another person pointed out Aussie dollar. Aussie dollar I think was covered already. So I look at gold. I know many people who look at gold. Most people who blow accounts blow it on gold. Most people who try to make big money make it on gold. Anyway, gold is becoming a bit fishy for most people. If you don't know how to trade markets, if you're trading gold for the first time, don't worry. These are normal moves on gold. Very fast moves to the upside, very fast moves to the downside. Normal corrections, normal things that happen in the market. What we are really keen on, I think, is to understand some critical levels which we're watching before we make a decision. On the dollar, I'm still long on the dollar. I think there's a high chance the dollar will hit 94.15. So I think there's still 2 basis points to the upside. GBPUSD, I'm expecting a move to the downside. Euro dollar, I think we still have some collapse to the downside. On the NASDAQ, I'm short on some of these markets. So I'll give you my insight on some of these markets that I'm watching, some of the setups that I currently have, and some of the setups that I took earlier in the week and what happened to them. So let me just share my screen. So hopefully you can all see my screen now. So I'll first start off by looking at gold. Let me just start off from the weekly. I think there's a bigger picture perspective on what's happening here, and then you can go down now to the lower time frames. Anyway, from the weekly perspective, clearly you can see this was a third bounce and we started some momentum to the upside. Took us all the way to about 1900 level, 1910, and then boom, we started a collapse. I expected this collapse to get some support from the 1800 level, but clearly you can see we are trading way below 1800 at 1755. So what am I watching? Before you make any decisions, I think it's important for you to have your critical levels or your critical points that you're watching before you change your biases or before you make some major decisions in the market. Anyway, there was a change in the interest rate look in the dot plot. So we expected the first rate hike to come in 2024. The Fed's pointed it will come as early as next year. So you can see gold bringing in that information, pricing it in. You can see the steep correction to the downside, trading from around 1860 to trade as low as 1760. A small rebound last week and a consolidation, much of a consolidation. Then this week the trend continues to the downside. So what am I watching? First level that I'm watching is 1750, but I'll show you that on the lower time frames. The second level that I'm watching is 1700. I believe if we get a good close on the weekly chart below the 1700 level, probably the trend could have changed and we could see a move to the downside. However, as long as you're trading above the 1700 level, I still hold that this is a bullish pattern. I still hold that this market could still move higher, and I still hold that I'm looking for bullish setups in this market. So that's one of the things that I'm very keen on. If you have been trading markets, trend lines, channels, and some of these patterns, you're well aware that you have seen such a pattern occur very many times, whereby we start an initial move and then we're followed by a correction, and then now the real move comes in. Again, if you've been trading markets, you understand that fair value, there's a lot of noise, a lot of moves up and down, so you really need to be careful about making decisions at some of these levels, because you're likely to make the wrong decisions very many times. Looking at it from the daily chart, let me go back to the daily chart. From the daily chart perspective, I have this beautiful trend line that I'm watching. So you can see we've gotten the first, second bounce, and now it looks like we've gotten a correction. If I just use a Fibonacci to measure this deep correction, I think there's a high chance we've still not gotten to 78.6. 78.6 comes in at 1725. So that's why I'm bringing in 1700 as the level for deciding whether to pivot to short biases or to still remain long. I believe if we get a bounce of this trend line, 1750, a good rejection, a good bounce, and a good signal from the daily chart, I can be easily tempted to go long in this market, but I'd want some confirmation from price action. So going down to the 4-hour chart, you can see clearly what I'm talking about. So we had this first, second, then you can see this steep collapse to the downside. Last week, some sideways movement. Then this week, we've been seeing some downside move. 1750 is the level I'm watching. I repeat again, if we get a close below this level, then I think we could easily go to 1725 and 1700 ultimately. But if 1750 holds, we get a good candlestick formation, then I think I'll be very quick to buy. I believe if this market will rebound, if this is a real bull move, the momentum that will come back to this market will be very strong. And if you're trying to sell, if I'm still right on my opinion, then you may be losing money. I don't trade my opinions. I wait for the markets to confirm my opinions for me to trade. Looking at it from a hourly perspective, this is the sideways movement I'm talking about. You can see we've seen a move down to 1754 yesterday. Now currently we're probably going to touch 1750. Right now I have no setup active on this market. I just have ideas on what I'm watching, and I'm watching now the patterns as they develop for me to make a decision. So that's my outlook on gold. British pound against the dollar. So looking at it from a daily perspective, I think this one was a no-brainer. It was going to go down if you looked at it from a daily chart perspective. So we had the first bounce, second bounce, third bounce. We've gotten a break, a retest of this line, a very beautiful pattern, very, very common, very, very reliable also. So you can see clearly a rebound to S1, and now markets are moving low. I think there's a high chance these markets will trade as low as 1.3650. Ultimately, I think this is the target you should be watching for. If we get a close below this level, then now we'll have some other targets coming in down. But for now, I think if you get to 1.3650, you should be, that profit should be enough in the market. I saw this setup, I think, on Friday when this market's rejected this lower level, which is a very, very common pattern for those who trade the Elliott-12s. I personally don't do it, but I'm at least knowledgeable on how the patterns form. So you can see clearly it's sort of a first move, second, then this is wave 3, wave 4, and then now we're finally in the last wave, wave 5 that many people talk about. So I think wave 5 could end at 1.3650. Then you could see markets go back very fast. This idea is supported by the idea that the dollar could visit the 94.5 level on the weekly chart. That's the level I'm watching on the dollar. So this is my outlook on GBPUSD. I think if you're trying to come in here, you really need to be careful on how you place your stop losses. If you place your stop losses in the wrong way, there's a high chance you won't make money, and you could be kicked out of the markets very, very easily as the markets are breathing in the move downward. So that's my outlook on GBPUSD. Pound, euro against the yen, euro against the Japanese yen. Let me look at it from a daily chart perspective. Yep, so this is euro against the yen. I think some of these markets, if you understand how markets move, they're highly correlated. You can see clearly the patterns are quite similar. We had a move lower, a rejection, and a move back to retest this level, which is similar to what happened on GBPUSD. And now it looks like we're getting a move to the downside. So I'm still short on this one. I'm looking for the 130 level, 129.5. I'll be watching price action to see what will happen in these levels. But I think that's the ultimate target I'm looking for in this market. On the 4-hour chart, there's no clear entry again on this one. So you really need to be very, very careful in some of these markets. Some of the fundamental risks contained in this market currently include NFP. So you should really be very, very careful if you're trading these markets towards the non-farm payrolls on what will be happening. But you can see clearly bearish momentum is coming back to some of these markets. I think it's a technical correction in most of these markets. Looking at the Dow. So last week, but one, we had a collapse on the Dow. Then the last week we had a move higher, a correction. And now this week it looks like the trend will continue to the downside. So if I just use my Fibonacci, you can see clearly I had a correction to 78.6. I think this is the beginning of a steep collapse back to 32,800, 32,500 ultimately as my target. I think that's the best level for me to target this market. I'm really keen on how the new pivots will come out, how markets will be positioned, because I think it's tomorrow, it's happening tomorrow. So I'm very keen to see where the new levels in the market will come in, at least from a monthly perspective. So looking at it on a 4-hour perspective, I think this was a third bounce. If you were keen on it, yep, this looked like more of a third bounce. So first bounce, second bounce, third bounce, and now we could be in for one of the biggest collapses we have ever seen in the markets. But let's first wait and see. Oil, we're now coming back down from $75 a barrel. We have traded as high as $74 a barrel. I was looking for $75 a barrel for possible shots. Unfortunately, we never got to $74 a barrel. 75, we got to 74 point something, and then we started the steep collapse. We had a correction. Now it looks like markets are going down. I'm really trying to find an entry on this one, because we had the first bounce, second bounce, and then the third bounce. But I never took this one despite my strategy of trading the third bounces of trend lines. Why? Because of the big picture. The big picture was not really supporting being long on the current levels in the market. So instead, I decided not to take this setup. And I think that's one of the good things about learning how to trade and having experience. You learn not to take all setups. If a setup has not met all conditions, you should try as much as possible to avoid it. And one of the conditions you should always watch out for is the market conditions. So if you look at the big picture, let's say you look at the daily and the weekly, and they're not so in line with what's happening on the lower time frames, then I think it's very good or wise for you to decide not to take some of these setups. You may lose some money because you may lose some opportunities, but at the same time, I think in the long run, you'll avoid taking suboptimal trades, and in the long run, your results will reflect that element of trying to attain perfection in your trading. So looking at oil, I think oil has a high chance of going down. This is just the beginning of some bearish momentum. I believe this correction took place to 61.8 level. Yep, you can see 61.8 acting as a good level. We could see a very steep collapse back to $71 a barrel, and then ultimately we could see the markets even move lower than that. So that's what I'm watching on oil. I think there's a high chance markets will go down, but I'm trying to find an entry. I'm still trying to find an entry. I've been trying to avoid trading at some levels, and this is one of the levels that I'm really trying to make decisions on. So I won't take this short also. I'll just pass it, but I'm looking for better setups. Looking at the NASDAQ has just created new highs never seen before in the history of the NASDAQ. So we're trading as high as 14,600, and I think there's a high chance you could see a correction from these extremely high levels in the markets. Most markets have already started going down. I don't see this as an exception. I think this is the norm. So we've gotten to 14,500. I was looking for an extended move to 15,000, but I think we could see a correction back to around 13,900, 14,000, 13,500 probably, and then probably we'll see the move to 15,000, at least from how price action is shaping up in the lower time frames. If I go down to the 4-hour chart, you can see the closes at this level. Boom, boom. So I expect probably at least my first target for this collapse, if it takes place, will be the 14,430 level, which I've seen is the last level for the daily trading. If you look at daily lower time frames, so if you look at the lower time frame levels, you'll see clearly that this is one of the major levels that you should really be watching out for. So I have this setup already active. I'm looking for this market to come to this level, but I think there's a high chance this market could sell off to this level before the end of the day. So I think I'll stop there. Let me just look at S&P as the last trade that I'm watching. So I've been short S&P from Monday. I've been waiting for this move to the downside. 42.91 is the current price level. We've gone as low as 42.88. So I'm looking for these markets to come back to these extreme levels, 42.38. And if I just look at it from a 4-hour perspective, you can see clearly this is my target. So I'm looking for this market to come back down all the way to 42.37.38. On the hourly, this is the representation. So I took the trade on Monday. I'm still waiting for these markets to come back to this level. So I think I'll stop there. I'll see you guys on Friday. If there's any question, I'll try to answer in the remaining 5 minutes. If there's no question, I think I'll stop there, and I'll see you guys next time. So let me just look at the chat room. Okay, there's no question, so I think I'll stop there, and I'll see you guys next time. Peace.